Hi, it's Ted Lee, and you're in the What We Do section of our website. And here I'm going to talk about how we process, negotiate, buy, and close short sale transactions for a variety of seller situations. I mentioned on the homepage that we do non-HOFA negotiated short sales. And for us, what that means is there's a tremendous flexibility relative to the property and the seller situation. So for us, the property can be your primary residence, your vacation property, investment property, or commercial property. It can be occupied or vacant in any condition, and it can be located almost anywhere. For the seller, the loan can be originated anytime. What that means is with HOFA, you can't work on short sales where loans are originated after 2009. With us, it doesn't matter. There's going to be a complete short sale document package we're going to talk about in a minute. There's no limitation on the amount that you owe one or more lenders, and there's no limitation on your income or savings. And what that actually translates to mean is that this can be a short sale where you truly cannot afford your mortgage, or it can be a short sale where you have negative equity and you're trying to find a way to get rid of the property. With us, we have a comprehensive short sale document package. There's no charge for this. Here, we prepare a justification for the short sale. There's going to be an authorization to release form that you'll sign that allows us to talk to your lender. There's going to be lender-specific forms that you'll fill in. There's a non-HOFA form that allows us to proceed with the lender's negotiator. Then we're going to have a non-agency independent contractor brokerage agreement filled out by the listing agent. The listing agent's also going to give us a copy of the MRIS page or MLS page. We're going to fill in the real estate purchase and sale agreement with a cash offer from our investment company. The cash offer will actually be an initial offer that we know is acceptable to the lender to allow the short sale to proceed. We're going to include a proof of funds letter. We're going to complete a preliminary HUD-1 statement to let the lender know approximately what the net payoff on the short sale will be. The agent's going to provide us with comps. We're going to provide a checklist for you for all the financial documents that we're going to need, and we're also going to give you a sample hardship letter so you can fill that out. Then once you've completed all that, you're going to send that in to us. We're going to review it, make sure it's complete, work with you if something's missing. Sometimes what's missing is the date, or someplace something had to be initialed or signed, or sometimes there might be a bank statement where it says there's 4 pages and you've only given us 3 pages. Believe it or not, lenders have a big fit if they don't get every page. So we have to review all of this, make sure it's complete. When it's complete, we will stack it in the order that the lender needs to see it, with our justification or cover letter on the front. We upload this to the lender's negotiator. We follow up a couple days later, make sure they have it, make sure they've logged it into their system as a complete short sale document package. Sometimes we actually start negotiations very early if the lender is beginning to talk about an issue. Sometimes they might look at your previous tax records and see that you've had income, and they actually may already start talking about a promissory note or talking about a deficiency judgment. So sometimes negotiations start right at the beginning, and sometimes they're going to happen a number of weeks later. So we go through this process to determine that the lender agrees that we have a complete package sufficient for the lender to proceed on a short sale request. And then what we do is we try to schedule what's called an interior BPO, or an appraisal of the property, so we have a basis for a negotiation with the lender on value. and we coordinate that whole process. Now, there is a one-time charge up front if we determine that there's already a foreclosure sale date, or there's a foreclosure hearing. And the point of all this is that we have a very similar document package, but we have to work very quickly, and we have to get to the right people to stop the pending foreclosure sale so that the short sale can be considered and we can move forward on negotiations. Now, as I said earlier, when we start negotiations, we're actually highlighting certain aspects of the package. Sometimes we're highlighting the condition of the property. Sometimes we're highlighting issues about the financial condition of the seller or the homeowner. So we're trying to kind of set the stage right up front. Negotiations is about a process to converge to an approval. So we actually have an addendum to the purchase and sale agreement that allows us to counter sometimes multiple times with the lender without having to go back to the homeowner each time. So we just continue a process until we've got an agreement with the first lender on the sale price and the net payoff. And we got to make sure that agreement actually works if there's multiple lenders and multiple lien holders. So we also have to reach agreements with all of the junior lien holders. And then we have to reproduce what's called these preliminary HUD statements or settlement statements so that the lenders can all see what their net payoffs are going to look like. And again, if the promissory note issue or something like that pops up, we actually negotiate that. Obviously, we always try to negotiate it completely away, where we've convinced them to drop the request. If we can't do that, based primarily on the fact that the seller has a lot of assets or income, then what we're going to do is try to negotiate down the request. We've been successful in negotiating these away completely, but we anticipate at some point in the future, based on the seller situation, a promissory note may actually be part of the final package. Now, if the negotiated short sale approval is acceptable to the investor buyer, we're going to proceed to close, and we can often close in 10 or 15 days after we get the approval letter. If it's not acceptable, then we're going to arrange for a new buyer to close pursuant to the terms and conditions of the approval letter that was actually issued, and we manage that entire process. Sometimes we have to extend the closing date. We've done this before. We're good at it, but we manage the whole process. So either we're closing or we're arranging for a new buyer to close on the same terms we've already negotiated on. Now, at the closing, I've kind of divided this up in two parts. If the homeowner that's selling the property is facing imminent default, and what that basically means is you can't afford the mortgage, you have either no savings or very limited savings. Sometimes you're not going to have any income. In that situation, there's going to be no closing costs, no promissory note, no deficiency judgment, and the waiting time to buy a new home is going to be 2 years. So you're going to be out from under this problem and you can move on with your life. Now, there's another category of short sales that we actually handle, and this is the situation where I mentioned earlier, where you may have assets and income, but the property is not worth what you owe, and for whatever reason, you want to be rid of the property. Here, we're trying to convince the lender to drop the request completely for the promissory note, or we may have a modified promissory note or an improved position. So that could be part of the final approval letter. And then the waiting time to buy the new home is still going to be 2 years. So we've done it where where homeowners have had income where the mortgage payment as percentage of their income was less than 30%, and there's been the final result was there was no deficiency judgment and no promissory notes. So I'm only mentioning here where there may be a case where we have a homeowner with lots of savings and very good income, and so we can't always guarantee that we're going to negotiate promissory notes down to zero. With respect to realtors, when they work with us, the duties are very limited. They're simply going to complete the non-agency independent contractor brokerage agreement that we provide them with a copy of. They're going to give us a copy of the MRIS or MLS that's part of the document package. They're going to complete the comps on the property, and ultimately, pursuant to the agreements in the brokerage agreement and the purchase and sale agreement, they're going to list the property for the authorized seller. So we're either going to buy it or we're going to find somebody else to buy it. Now, with us, we have tremendous flexibility. So for realtors, we can work on more properties. We don't really have these narrow, rigid limitations. So we can do really just a range of short sales. We have near 100% probability of success with our system. We have the ability to close short sales quicker, actually in less than 90 days. And if you want to compare that to a half a short sale, half a short sales can take anywhere from 7 months to even 12 months. And you no longer have to speak to any lenders. We handle all of the financial issues on the short sales. Now, I'll meet you in another section of the website if you want to learn more about what we do or learn more about HAFA and non-HAFA short sales. But if you're ready to get started, just click on the Contact Us tab, fill out your information, and we'll get back to you in 24 hours.